on with the RBI annual report because it also highlights that the total number of bank frauds, while they fell by 33% last fiscal when compared to FY24, the fraud amount has risen nearly threefold to over 36,000 crores, with public sector banks accounting for 71% of the same. Ritu joins us now with more. Ritu, take us through some of the key highlights of what the RBI is saying when it comes to bank frauds.
Well, let's start with something that always raises eyebrows, and that's bank frauds. In FY25, the number of fraud cases actually dropped by a third compared to the previous year. But here's the twist. The amount that was involved actually tripled from FY24, hitting a massive 36,014 crore rupees. But the spike is explainable because a big chunk of more than 18,000 crores actually came from 122 older cases that were initially missed and then reclassified as frauds later. Now, when we look at where the damage was, public sector banks bore the brunt, making up for more than 71% of the total fraud amount, while private banks saw the highest number of cases. In other interesting highlights, India continued to shine when it comes to digital payments. It accounted for 48.5% of all the global real-time payments driven by UPI. Digital payments surged, with total digital transaction volumes rising by nearly 35% and value by 18% year-on-year in FY25, with UPI leading the growth. Overall, 99.9% of all the non-cash retail payments were done digitally in FY25. But even as digital payments continue to rise, cash is not really going anywhere. The value of bank notes in circulation went up by 6%, with the 500 rupee note making up 41% of the volume, followed by the humble 10 rupee note. Now, here's something new as well. The central bank digital currency, or the e-rupee in retail, that rose by 333% in circulation to more than 1,000 crore rupees in FY25, and the CBDC pilot now has 60 lakh users in India. And finally, some good news on the fake note front, where the number of counterfeit notes detected was down to 2.17 lakh pieces in the year.
Ritu, many thanks for joining.